Realtor.com has some interesting data regarding the housing market. They look at different issues around the economy and different sectors of the economy in order to understand the housing market and how those different factors affect the housing market. So today we're going to talk about inflation, looking at the core CPI report. We're also going to be looking at how employment and jobs affect the housing market. In another video, I did explain how if we truly want home prices to go down, unfortunately, a byproduct of that is more unemployment. And in this Realtor data report and different charts and graphs that they have, we show how we need unemployment to rise in order for home prices to go down so people can afford homes to buy. If you all find value from this video, please be sure to subscribe to this channel. I talk about the housing market, personal finance, and the economy as a whole. All right, so while the economy added a surprisingly strong more than 300,000 jobs in May, wage growth cooled and the unemployment rate ticked up at 3.7%. This is actually a mix of good news and bad news. The bad news is that unemployment is up and people are losing their jobs. And also the wage growth is not growing as high as like these mortgage payments. And so that's unfortunate news. But the positive side of it is that unemployment is going up. And so that does affect home prices. It does tame inflation. Now, not as many people have money to spend on the economy. And so inflation cools down. And so if you look at this chart that Realtor has, they saw unemployment took up to 3.7%. And you see this chart, of course, when the pandemic first hit, this went over 14% and then dropped like a bomb. It was crazy. You see these little up and down ticks happening 2023. And so we're probably going to see unemployment go above 4-5% in order to really tame inflation. And just looking at what happened previously, when the market crashed back in 2008, unemployment was pretty low, right? And then when it crashed, unemployment went high, and it went high a decent amount. It was touching 10% unemployment rate, which is still super high, but it didn't reach this over 14% like it did when the pandemic first hit. And so this is great data for us to understand, okay, now that unemployment is going up, now we know that maybe home prices will start to cool down because inflation is cooling down. All right, on the positive side, the annual headline CPI receded to its smallest rate in 2 years. So CPI in general went down, but core CPI, which exclude food and energy prices, fell by a smaller amount, and monthly price gains rose for a second month. Yes, there's core CPI and then there's CPI. Core CPI excludes food and energy prices, and so it includes rent, homes, things like that. And so that actually fell, which is great news, but it did gain month over month. All right, now talking about mortgage rates were steady in early May around 6.4%, but climbed in the later part of the month, reaching nearly 6.8% in early June. It did cross over 7% over these past couple of months. Inventory does continue to climb relative to 1 year ago as homes sit longer on the market, and I think that's because people are still thinking about home prices of 2022 and they still haven't made the adjustment to 2023 that, hey, mortgage rates are high, you need to make these adjustments. But new listings are still down, and so eventually inventory is going to go down because new listings are down. The advantage over last year is shrinking and declines are likely on the horizon. So Realtor believes that declines in home prices and different data is going to go down. The number of sellers putting new listings up for sale is still lower than prior years. Listing prices are playing catch up to sales prices, which dropped again month in May. And let's go back and look at these different charts that Realtor has to offer. Existing home sales rebounded slightly in spring 2023, but remained 23% lower year over year. So homes being sold are still so much more lower. And then you see the median sale price, and the existing home sales are the different columns, right? The different bars. And so you see existing home sales are going down. Home prices are going down a little bit, but not to the point where it actually makes sense for most people right here. I know that's a little bit unclear, but it is bigger for you all to see. And I always go back, look at 2008, 2007, see what happened. The thing is that existing home sales did stay above the median sale price throughout the last recession. We're not seeing this time, right? We've seen a huge discrepancy between existing home sales and median sale price, right? The less of the inventory we have, the higher the price, obviously. This economy is acting super weird right now because because, for example, if you look right here, we had so much more existing home sales, like a lot of properties being sold because there were a lot of properties on the market, right? There was way more of an inventory. And on top of that, prices stayed relatively the same. Yes, it did go up somewhat, but like people were still buying houses because these home prices were affordable. Another thing that I want to mention on this report is that they're talking about new construction. So builders have been optimistic and construction in May picked up for both single and multifamily homes. Less constrained inventory is expected to boost new home sales relative to existing in the months ahead. And so builders are seeing this low inventory and they're taking advantage, right? And plus construction cost is high, and so they have to price the home accordingly. But these new construction builds are mad expensive. They're still expensive where people are not buying them as much as they were doing a couple years ago. Yes, people are still buying them and builders have a chance to really capitalize on that since the inventory levels are lower. But it's interesting to see that builders are being more optimistic even though we have higher mortgage rates. Home prices are expected to soften relative to early projections. So Realtor, they projected out, okay, what are home prices going to be this year, 2023? And they put a projection for a price higher than what they now believe home prices are going to believe. So they have a more price prediction of a lower medium home price for the year later this year. But buying costs are still high, and the elevated rate of cross-market home shopping that we've seen recently, driven by the surge of affordability, is likely to come. So cross-market home shopping. So a lot of people, California, coming to the South, coming to the Midwest, looking for a property that they can buy. Another interesting thing that Realtor has is like this hottest zip codes. I know it says 2022 right here, but they updated the data. This is according to March 2023. But according to my research, these different cities are still relatively the same. They're still relatively hot in demand. And so we have Rochester, New York being one of the hottest zip codes, hottest cities out there. We have Ohio, we have Connecticut, we have Wisconsin, Ohio again. We have Ohio again. There's so many Ohios in the top 20, and then we have Wisconsin a couple times. I'm actually really surprised that Massachusetts has some of their cities in this market. And maybe that's because it's just outside the larger cities of Boston, New York, New Jersey City, or things of that nature. And so the home prices are a little bit more affordable and people want to stay on the East Coast. And so they go to the surrounding suburbs around the area. If you look at the next slide, the next 21 through 40 hottest markets, and you can see like it's going down according to the hottest rank. And we have some Tennessees, we have some Illinois, another Tennessee. I thought in the first 20, I would see more like southern cities. I think the only one we have, I don't see a single southern city. I wonder why. Most likely, I know other realtor sites or other homeless listing sites like Zillow or Redfin, they have a ton of Florida cities usually in this list that people are moving to and whatnot. All right, this is a super interesting data coming out from Realtor. So this is US population by age in 2021. So this is 2 years ago, but granted, it's relatively still the same. And so right here, they have Gen Ys and Millennials as the most populated group. And usually, you know, ages 27 through 40, 43 have the highest amount of people. Yeah, I think it's interesting how it moves. Like it goes down and then it goes back up. And maybe because it's baby boomers and there's a ton of baby boomers, but I would be thinking like, okay, yeah, it would rise, it reaches peak around 30, 32, and then it'll just start going down. But we start seeing like this rise. And I think it's because, once again, the baby boomers. But it's interesting that the most amount of people are millennials, and these are the groups that are looking for properties. But what are their income levels? They're not as highly net worth as baby boomers or even Gen Xers. And so that's very important to gauge because yes, there are a lot of millennials that are in tech jobs and sell jobs and they're making money on YouTube and different things like that. But at the same time, you have a lot of younger people that are quitting their job, that are doing this, doing that. They're just renting and they have a different mindset. And then Gen Zs, this is a totally different group of people and they're not as, I don't know, maybe they'll change in their 30s, but what I've seen is they're not as motivated to buy a house. They would much rather rent a property, even though it's higher cost, than to own a property themselves. All right, you all, let me know your thoughts on this data from Realtor. Do you believe home prices will fall later this year, fall, winter months? Make sure you all subscribe and I'll talk to you all later.